everyone, and welcome to what is for David and I our third webinar of the day. I know some of you have been with us already for the previous two sessions, and some of you are joining us for the very first time, but if it's your first, second or third time, you are all very, very welcome. As always, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't think of using money that you cannot afford to lose. And as always, here we are, David and myself. And in this session, as with all the sessions, we will be looking at the markets through the prism of volume price analysis supported by our quantum trading tools. Volume price analysis, I know some of you have seen this slide before, but there may be people in the room, this is their first visit. The methodology is explained. It's the sort of starting point for the methodology in the book that is up on Amazon at the moment. It's still a #1 bestseller, and absolutely delighted, and lots and lots of 5-star reviews. It's not for everybody, you know, there are some 1- and 2-star reviews, but hey, as I said, it's a methodology that David and I have used for 20-odd years. It's served us well, and we're just very happy that we've been able to share it with the trading and investing community. And it's just been, it's a joy for us to receive the comments, the good and perhaps not so good, and in particular the emails that we get just saying that the methodology has really opened their eyes to what is really going on in the market. And I suppose if you wanted to if you wanted to sort of explain this in a very quick way to someone who may not understand, has never come across it before, and that is, you're really, what it does, it reveals what is going on the inside of the markets. It tells you, some people call it the smart money, we call them insiders, the market makers. You know, there's naughty people on the inside who are really taking money hand over fist from independent and traders, investors like ourselves. But once you can spot their tricks, as I said, you won't look at a chart in the same way again. And what we've done with the book, that's the book that explains it. There is a complementary book which is examples. There are over 200 worked examples, because the beauty about the methodology is that it works across all markets and all time frames. And the one that's bundled with the volume book is stocks, indices, and some commodities. And there's also a forex version as well up on Amazon. But just Google my name, Anna Cooling, or go to Amazon and put in Anna Cooling. All the books and the bundles are there. What I said earlier, we've also developed a set of indicators to help us with our day trading futures and the cash markets, although the indicators you can apply again across all markets. We have some specific forex ones, which you can use them also for investing. If you haven't had a chance to look at my site lately, I've changed the sort of slight emphasis on there. So the main blog covers a lot of stocks and some indices, but a lot of stocks, and stocks are just fascinating. And you'll see how volume price analysis can really help us understand what is going on the chart, but what's much more important is what is going to happen next. But the tools, you can use them for trading and investing and really across all the markets. But there are 1 or 2 specific tools that we have developed for the day trading fraternity, and when we move over to David's charts, you'll be able to see them in action. The platforms are that we've developed the tools for: MT45, NinjaTrader, TradingView, and we've also got TradeStation in the pipeline. We're just working on that at the moment, and we've got some really, and maybe even have some really cool new indicators for that specific platform, because it's a very special platform. The tools include are for time-based and non-time-based charts, but as I said, much better to see them in action, and you'll see them when we move over to David's machine. All our indicators, if you buy anything from us, they're all covered by a 7-day money-back guarantee. You can buy one indicator bundle, or you can buy the package that we've put together. As I said, this is for NinjaTrader. We call the essentials, and they, as I said, we've bundled them together for day traders, and the cost of the package comes in at 749, discounted from 1,415. And the good thing about buying a package is that when we develop any new indicators, they are automatically added to that package. The last one we developed was actually the Camarilla levels indicator for all the platforms, and it was automatically added to the package on NinjaTrader. But you can buy one, you don't have to buy the package, and if you buy one, there are other bundles there, and you then decide to upgrade, you will always get credit for the for whatever you've bought. They're yours for life. The price also includes upgrades, to whether it's an upgrade to the platform or an upgrade to the indicators themselves. That's it. You never pay us another penny. But you can discover more about the indicators at quantumtrading.com. There's all the as you see there, the platforms that we have available. TradeStation isn't there at the moment because we're just working on it, and as I mentioned earlier, annacoolen.com is where you can sign up for the other two webinars that we've just done. One is for the London Forex session that may be out of your time zone, and we do one at about lunchtime our time, which is the start of the New York session for Forex.
Sorry, Anna's got a bit of a cough. Hold on a minute. I'm just going to transfer over. Just want to make sure that's come up on your screens. I can see it on Anna, so that's fine. That should be good to go. So straight over onto the Ninja platform. I've actually got the commodities up just to start with, because particularly for oil, it is really moving at the moment. You can see here we've got we had a strong move. We had this very strong congestion phase through into the morning. Then we broke out, more congestion, breaking higher, lots of volatility. Volatility has been triggered. I spent some time on that on the previous webinar, explaining about the volatility indicator and the power of it. And it is truly that. It is the anticipation of what is going to happen next, or what is likely to happen next. It doesn't always, but generally it does. As a typical example we've got here, lots of volume, volatility spike, the markets move very rapidly. What happens? The market then congests back inside the spread of the candle. We've got exactly the same thing being repeated now on the 15-minute time frame. The volatility is triggered, so we know we'll see some fast-moving price action. Traders will be jumping into this, not wanting to miss out on the move, fear of missing out, FOMO. And as I say, the volatility trigger has been initiated. Let's just pull that over a little bit, make it a little bit bigger. There we go. And at this point, if you were trading this to the long side and you get this volatility triggered, then you've got a decision to make. Let's just suppose you're in profit at this point. The question you've got to ask yourself is, do I want to sit through what I anticipate to happen next, which is some sideways congestion or possibly even a full-blown reversal? That's the question you have to ask. And to be honest, I think almost without exception, if I'm in a trade and I've got this appears on the chart, whatever time frame I'm trading, I will almost always close out, take what it is I have off the table, and wait for the volatility to calm and wait for the price action to then move away from that particular area of the price chart. Sorry, I've got the chat box open over here. I'll just move that out of the way so I can see what's going on. Because what we expect to happen next is for this to move into congestion. It's also reinforced by the fact that we've got the volume point of control here. This yellow dashed line is also in evidence. So we're trading around that region. We've got decent volume in here, lighter volume up here. So once we break through that area on the other time frame charts, then you're looking at the possibility of a move higher. What's interesting about the volatility we've got here, we haven't got it, sorry, on 30. We haven't got it on 30 so much, although we're still trading in this one here. So it'd be interesting to see if we get volatility triggered on this as well. But for the time being, we've just got it on 15. But seeing it on 15 will give you a heads up as to what is likely to happen on 30. And in addition to that, obviously, what is going to happen over on the daily chart. In terms of the daily chart for oil, putting aside, obviously, the politics and everything else to do with, particularly with oil, with supply, with OPEC, with alternative energy sources, etc., etc. Purely from a technical perspective, we're seeing a bottoming out. Got some very strong, we've got light volume on the volume point of control, so the fact that oil has moved through this region relatively quickly is no great surprise, from 54.50 up to where we are now, a couple of dollars a barrel. We've got a very strong region of potential price resistance now coming into play just below $57 a barrel. The width of that line denotes the strength of the potential resistance. This is the accumulation distribution indicator on NinjaTrader. For those of you who have it, I'm sure you know how it works. But basically, the stronger the region, then the wider is the dashed line or the solid line, however you want to present it. I prefer it as dashes myself. And that then gives you a clear visual image of how strong that region of potential price resistance is likely to be as the market approaches it. You've got another level here. You've got lighter regions up here. This is less strong. You've got a cluster of two here, which is creating some strength there if the market gets back up to 61. And then you've got the volume point of control, which is way up here for the time being, purely because that was the heaviest concentration of volume. And that was the longest period that the market spent at that particular point. You can see there also the trend monitor is just starting to transition out of that bearish phase of price action we've had for some time. So we're starting to see the first signs of a potential rotation into a bullish upwards trend for that particular market. Back onto 15, just see what's developing there. We'll wait for that candle to close and then we'll come back to it and see if the market did indeed consolidate in that region or not. In terms of gold, again, I mentioned this, I think, in the Forex session this morning. It's interesting times for gold. We highlighted it on the blog a few days ago. If we were going to get some sustained weakness in the dollar, then that was really going to help propel gold higher, which it has. And it was on up to $13.85, $13.90 per ounce. There was resistance there on the weekly, I think, from memory. And if we get through 14, then we could actually go a deal higher, particularly if there is going to be sustained dollar weakness with a follow-through from the Fed over the next few months. And it will certainly propel gold out of what has been a very, very tight trading range over the last, well, months and almost years almost. It's been trading in this range, very narrow, 1150, 1200, up and down towards 14 and back again. So it would actually be nice to see gold propelled out. The issue for gold is very much around inflation, which is non-existent pretty much globally. So that is not going to help it. So it's really going to be driven through either intraday on risk, where you see flows into it through safe haven buying, or alternatively what we're seeing now, which is perhaps the start of a longer term development bullish trend driven purely through the metric of the dollar. You can see down here on the 15-minute and the 30-minute, we're in congestion, pretty strong congestion at the moment. And again, volatility is in evidence. Volume point of control, we had huge volatility spikes here into the volume point of control, trading around that region, another one there. So we're trading volatility within volatility, absolutely going nowhere right now. And when it trades in these sorts of regions, it's a question of setting levels, defining where they are, where are your comfort levels, 1390, 1395, break to the upside, to the downside, probably around 1380. Got a very strong platform of potential support in here at 1375. But that's in just total congestion for the time being. And it's a question of being patient. And just going back to the multiple time charts where we've got the NQ. I've got the NQ running on here. Got 15-second, 2-minute, 5-minute, 15-minute, and no, I've got 10-minute. I've got them reversed, I beg your pardon. Let's just change that to, I will leave them as they are. That's fine. There's 15-minute, 10-minute, and the daily. What we're seeing is, as you would expect, what's interesting about today's price action is a lot of this price action has been on Globex. And as I keep saying, I know you're probably bored sick of hearing it, but if you're trading any of these markets on Globex, the mini markets, the futures contracts, anything commodities, you do get nice moves on Globex. It's a fallacy to think, let's just pop that open full size, there we go. That's the move on Globex. I mean, all of this is US session last night, so this is where we closed off. All of this through here, through to 2:30 our time here, is Globex trading. So I'm afraid I take issue with people who say, well, you should only trade indices when the cash markets are running in parallel, when you've got both markets open. I'm sorry, I disagree. And the reason I disagree is first of all, because volume applies in exactly the same way. Several reasons, in fact. Secondly, you are not at the mercy of the algos, which don't tend to trade these sessions. They tend to be in here, which is why you get all this severe volatility all the time as soon as the cash market's open. And thirdly, as a result of that, I guess, what you also see during the electronic session only is that you get more even-paced price action. I mean, you only have to look at this, really, and it tells its own story. What we've got down here, huge volatility. Okay, it was the Fed. You know, it's big. It's going to create that. It's inevitable. But you've got exactly the same up here. You know, this is the open of the market. Lots of volatility, lots of whipsaw, lots of horrible price action. Very difficult to trade. There's no real trend there. You've just got to wait and be patient for the trends to come to you. Well, you know, trading through here is pretty comfortable. It may be a little bit labored at times. You know, it may lack the volume spikes that you see in the cash market. But nevertheless, if you're patient, if you're prepared to trade, you know, steady, even price action, if that's what you're looking for, then trading these markets in Globex is perfectly acceptable. And I would say, in some respects, is actually more comfortable than trading in the markets when the two are running together. And given the trend higher and what's been going on, it's no surprise to see some selling coming into the market. Let's just have a quick flick up on 15. This is very quick. This is a 15-second chart. I know you've seen this before many times. Trading around the volume point of control, but the principles are exactly the same. The volume profiles, you know, you get these big spikes, you get market going nowhere, weakness coming in. That's what you're looking for. 2-bar reversals. You've got the volume point of control. You've got these support and resistance levels building. Nice strong resistance above, decent level of support below. Once the market breaks down there, if your tactical approach to the market is to be a scalping trader on this, then that's what you're looking for. You're looking for a breakaway. Nice solid move. You've got decent platform there. Once you break through that with decent volume, rising volume, you're looking for a move to the downside and jumping in and bagging as many pips as you can or points. It's not everybody's cup of tea, and I'm not suggesting it's the only way to trade these markets. But as we've said before, we've said it in the rooms this morning and also in the forum, in the education forum, it's finding what suits you temperamentally, what suits your personality. It's all about the psychology of trading. If you're trading something you find comfortable and you enjoy, then you will be more successful than if you're forcing yourself to do something that you don't actually enjoy. If you're not a scalping trader and you're forcing yourself to do it because you think that's what you should be doing, then you won't succeed. Equally, if you're a longer term trader, because it might suit you because you have to trade that way for work, live work relationships, obviously, but it's not actually what you're comfortable with, you will struggle. You have to find what you're comfortable with and what you enjoy. It's as simple as that. And it has to be fun. It's about making money, but it also has to be fun. You've got to enjoy what you're doing. If you don't enjoy it, you won't succeed. It's as simple as that. Just seeing what's going on the slow. This is a 15-minute. Again, you've got tons of volatility here. Just pull that out a bit. The volume here is not invalidated. It's just compressed by the fact you've got this massive surge in volume all the time. It's just a fact of life. As the cash markets come in, then the volume is compressed on the Globex. Again, volatility, we're trading inside. We've got another volatility candle. We're looking to trade inside. Once we clear these volatility candles, then you can look for opportunities to the downside if that's the direction it goes. But the fact of the matter is, you've got to wait until it clears these regions. And if you're in a trade, then it's all about anticipation. In this example, if we do break down, we've got very limited price support below, not very heavy here either. If we got down to this level, then it should go through here very quickly, because what the volume point of control tells you, not only to tell you where the VPOC is, it tells you about the distribution of volume vertically, but it also highlights these low volume regions where volume is thin, and therefore as the market gets to those regions, it's like to go through fairly quickly, which you want to know as a trader. It's all about anticipation. Why is it going to go through there fairly quickly? Because there's very little in the way of volume to actually present a barrier to the move lower. So these are price support, these are price-based support regions. The volume can be used in the same way. So where you've got high volume like this, then if a price is approaching that particular area, you can assume that the market is going to struggle at that region based on price. And if you've got price-based resistance there as well, it's doubly going to struggle. So it's all about, from a technical perspective, using volume or price as a metric for defining support and resistance areas on the chart. Here we go. So we broke away, we got through this region. What's interesting is when it back up to test it, came off again. Now what are we seeing? We've got some nice rising volume here. Very nice volume under this candle, no wicks to top of modern. So what are we expecting from there? Further downward selling, which is what we're seeing right now. The trend monitor you can see through here. What's interesting, an extended congestion phase. I appreciate it's 15 seconds. So, you know, there's I don't know how many candles in here. I'm not going to count them, quite a few. If this was a 5-minute chart, this would be some considerable time. But, you know, it's exactly the same principles. The trend monitor has gone through this region. It started to transition, but didn't actually go through to any full-blown reversal. It went into darker red. It said, okay, yep, there is a slowing down in this bearish sentiment that we've seen through here. Then it went into the darker blue, but it never came out the other side. Then it transitioned back into darker red and back to bright red again. A little flicker here, but back through into darker red here again, which it's now holding. Because what the trend monitor does, as opposed to the trend dots, which work really well on the renko charts, is the trend monitor takes a more considered view. It basically is there to help hold you in trades, because the most dangerous time for any trader is when you've got a decent position. Maybe you've taken this position here, you've got a few points in the bag now, and you're not sure what is going to happen next. You're not sure whether this is actually going to go all the way back up and maybe even higher, or whether this is just simply a minor reversal in the longer term bullish bearish trend. And I'm talking relatively speaking. Obviously this is if we call this our primary trend at the moment, we've got this pullback here, and now we're trying to understand whether this is actually a full-blown reversal and going to go completely the other way, or whether it's actually going to continue lower in the short term. We're starting to see a slight change on the trend monitor, which is no great surprise because we've got 4 or 5 candles here building, pivots to the upside, pivots to the downside. We've got low volume to the upside. We had a decent volume spike here, which looked a bit ominous, but then the following candle had a wick to the upper body with decent volume under it, so that's not too bad. That's encouraging. We're now starting to see a little bit more selling coming in. We've got some minor resistance helping us over here, tested on that candle. This is still building into darker red. A little bit of weakness on that candle, tried to rally, decent volume below. Just see what's going on the other time frames, just get a different perspective. Over onto what seems to be a very slow time frame of 5 minutes, but you know, everything is relative. And that's what it's about. It's just reading. Whether you're a scalping trader, as a scalping trader, you might have on Ninja, you could have, I don't know, 15 second, 30 second, and a minute maybe as your 3 primary charts, if that's your time window. Just get rid of that. Time window. Just get rid of that. Oh, sorry. There we go. Yeah. Still trading in this narrow range. In congestion. Selling pressure is diminished under that one. Just keep an eye on what's going on elsewhere. What's interesting, down on 15, you've got some decent support coming into play here. Down at 50, up to 52 maybe. It's already tested that region. You can see here how it held and probably created some of that support here through that minor reversal. That was very early doors this morning. So that's now coming into play over here. We've also got another level up here. So if you're a scalping trader and you're searching around, you're thinking, okay, I'm looking at this, you know, this is now reversing against me. This isn't looking too encouraging for holding this longer. You're seeing a transition through into darker blue. You've got rising volume under this candle. You've got rising volume now. This is looking as though it's going to reverse back up to the volume point of control again. This is all very compressed. I mean, we're only talking about 10 points here, But if you're a scalping trader, you know, you've got to operate at speed, you've got to be in and out, you've got to make your decisions quickly. You can't hang around too long and just sit there and wait and see. Not if you're on these sorts of time frames. If you're in 5 minute, 10 minute, 15 minute, that's fine. Completely different ball game. Your time horizon is totally different. I can't stress it too strongly. This is not for everybody. This is not, you know, I'm not advocating this as a way of trading. I just do it because it speeds up the process of learning. If you're learning about VPA and you're learning to use the indicators, it's a great way to practice because they move at speed and everything is relative. So whatever you learn on this chart will be applicable to any other time frame and indeed any other market. The principles are identical and the indicators work in exactly the same way. And I can assure you, following yesterday, there'll be plenty of traders who'll be buying this market, holding it for the longer term. The fact that it's come off the highs today, that's fine. It's very bullish at the moment. It's got a way to run up here, up to 7.9 and break through that region. Volume's falling away. And that's perfectly valid. It's a completely different perspective. The trend monitor you can see down here is bright blue, has transitioned. We've had pretty much a V-shaped rally. Trend monitor was bright red, then we went dark blue. Now we're into bright blue as we break higher. So there's plenty of opportunity for this market to move to the upside, particularly with the dovish, driven by dovish Fed, which is like to be the case for certainly the next rest of this year and probably into next year. Just go and have a look at, so see what's happening over on oil for a moment. There we go. Okay. We're now starting to break away. If you remember, we had that volatility, and it didn't actually. It looks as though it may not actually retrace on this occasion. Looks as though it's going to move higher. Have to wait and see. Got a bit of run to go for that before that candle closes. Low volume node ahead. It doesn't always happen. There is no always in trading. There's no guarantee in trading. It's just the anticipation that it might. If it hasn't on this occasion, and you've closed out and you've taken your profit and you've thought, okay, fine, well, we look as though we're going higher, we've cleared well away from that region, okay, you've lost 30, 35 cents a barrel. Which would you rather have? You've given that up, you've closed out, you've taken some profit, you can go back into the market now quite happily and not have to worry about sitting through congestion because we cleared it, got decent volume under that last candle, nice widespread candle, looks as though the market's going to press higher. Just have a head over onto the indices and just see what's going on in terms of the dollar itself. Just move that out of the way. There we go. Here we go. This is part of the reason that we're seeing the move lower is certainly in terms of indices. We've got yen buying coming in the market now. We had heavy over at, let's just pull that over a bit. There we go. This was this morning. Strong yen selling pretty much universally across the complex, aside from the pound, which was driven by the BOE decision and all of that. And we're now starting to see yen buying coming in the market, which is why we're seeing indices come off a little bit. This is the dollar over here. A little bit choppy. It's not really creating anything much in the way of a trend right now. This is on 5 minutes, so it's pretty quick. So I'll just squeeze that over there, give you a perspective on where we are. But we're trading in a congestion zone, and if we break away from there, then you know, we will see the market move a lot more rapidly. This is down on euro. We're seeing some decent selling of euros since really the US Open, and this is over on the British pound. We had that big move. This is 12 o'clock our time. This is when the news came out, down to around 1:30, and then we've got obviously US news, US markets opening up. We're starting to see the pound rally, and that would have been a nice reversal trade on the CSI. See where we are with the NQ. Just move that out the way. There we go. Just down on 15. We've got a hammer develop there. Let's have a look at that. Okay. Not a huge amount of volume under there, but this volume is always going to attenuate a little bit after the open, because you get the open, big surge in volume, and then the volume naturally dries away a little bit, or dies away purely through purely based on the fact that you get this big surge as all the algos open up simultaneously, and then gradually the volumes start to settle and even out a little bit. So you always get these big spikes at the open. Decent hammer there, pivot forming underneath. We'll see where that one goes. Let's just go on to the tick charts for a moment. There we go. I've got the ES running on the tick charts, just see what speeds we're doing here. It's pretty sluggish, to be honest. This is, you might not be able to see, that's 1597, 1597 and 2584. Probably see this more clearly, 1750, 2066 and 2959. These are pretty low numbers for the ES. The ES normally trades on tick anything from a few thousand up to maybe 15 or 20,000 when it's really ramping up. So this is fairly sluggish, and what the Tickspeedometer tells you is it really gives you that message very clearly. It obviously delivers the tick speed settings, which I've got here. These need to be adjusted a little bit. Just change that one to, let's go off, I'll go off the actual. Just put that one in there. See how quickly they change on the actual, which is why we developed this one, which is, it gives you the closest to the actual using a Fibonacci relationship. It's not nothing to do with Fibonacci in the indicator. It just gives you a figure to use for the tick chart, which doesn't change quite so frequently, because changing these literally every tick by tick, which you would be, as you can see, they move pretty rapidly. So let me just change this one over. Very easy on Ninja, just put the T in after it. There we go. And what you see with tick charts, as indeed with the Renko, which I've got set up elsewhere, is you see the momentum of the market as the market literally is speeding up and slowing down. If you're a scalping trader, that's why scalping traders in particular like to trade on non-time-based charts, because you see the momentum, the raw momentum of the market, the speed. And once the market is fast moving, then these will come out literally like as if they're bullets being fired from a gun, literally that fast. You never see that on a time-based chart, because these candles form based on the metric of the tick. In other words, how long it takes for 1597 ticks in this case to come through the market. Once that's happened, the candle forms. So that it's irrespective of time. Doesn't matter whether it's a second or a millisecond or a nanosecond, whatever it is, that's when the candle will form. And what you're seeing up here, these red areas, is where tick activity is very low. So the tick activity right now, the participation in the ES is falling all the time. It's very sluggish. The market's not going anywhere particularly quickly. You're seeing it on the 3-minute time frame, and you're seeing it on the 5-minute time frame as well. So tick activity is falling away. Participation rates are low. Everyone's stepping back from what's going on. And what you're waiting for now is these tick speeds to pick up, to get back to what they should be in terms of either orange or green, where you get the big spikes in volume. That's what you're waiting for as a tick chart trader, because when you're trading on these red areas, it's dangerous because the market is going to be trading sideways. The other reason we developed the indicator, not just to deliver the optimal tick settings, which most traders guess, let's be honest. The second reason we developed it was because it also allows you to blend an analysis of volume and price, because you've got the volume bars here with conventional price action, but you can also blend it into trading off the tick chart. So you've basically got VPA over on the left here and the tick delivery over here. So you trade off the tick charts. It just brings everything together on one workspace with one indicator. But as you can see, very sluggish at the moment, a lot of red around. Volume's not particularly high, tick activity is pretty low. Just go back onto the commodities again. Let's see where oil is going. It's rising nicely at the moment. There we go. We've cleared that volatility. Good solid volume under this one. We're through 57 a barrel, up to 57.12. It's really confirmed on the 30-minute there, where we had some volatility, but we cleared that. Good volume under that candle, and we're climbing nicely on that chart as well. We've got low volume ahead. So all things being equal, we could see a much stronger move for oil, depending on obviously politics and OPEC and everything else. In terms of the only caveat to that is, as I said earlier, in terms of the daily chart, interesting to see. I have this volume closed off, by the way. You can have it running in live. I have it closed off to complete only at the end of the day because we're running webinars, loads of data coming in here, and I don't want to slow everything down. So I have to wait until the end of the day for the volume profile to complete. But nevertheless, it's if this closes with good, strong volume, as I say, technically we've got these regions which we're now testing at just on 57. 56 we've gone through quite comfortably, and we've got another level in here at 58. This was low volume. Volume is more concentrated in this region, so it's going to have to require some further effort to get back through there. But all things being equal, plus coupled with a fall in the dollar, if we see further weakness in the dollar, then that is going to propel it higher in much the same way as what has already happened for gold. Let's go back over there again. Pop that up full size again, back into another congestion region. We've got the volume point of control underneath here. This is a very solid platform. We've got another one that was acting as resistance. Looks as though it's about to be taken out. It's on 15 seconds. A 2-bar reversal down on 10-minute. And the 15-minute, we've got this hammer candle here. Volume's not particularly high on that. Go back over to the commodities, just see what's going on. Oil coming off a little bit. Gold not really going anywhere yet. Really struggling, got volatility all over the place. But this will cheer the gold bugs up. That might move that over to the watch. Let's put a look at that on the weekly. There we go. That's the weekly chart for gold. And this was a sort of region, the area that we suggested it might struggle a little bit. But once we get through that, if we get through 1400, then we've got a really low volume node immediately above, up to 1410 and beyond. And this is relatively light price-based resistance. So, all things being equal, if the dollar weakness continues, then this should push gold up even further and through 1410, 1420 odd in the sort of short to medium term. Dollar still trading in a compressed range. This is the yen, which is still rising. That's why the indices have come off. Euro selling looks as though it's continuing, and the pound's come to a bit of a pause point in the buying. Let's see if anything's happening on the ES. Still very, very sluggish. These numbers not changing at all. It's still very much punctuated with red and orange. Very, very slow at the moment. Just have to be patient. And if you want to dig trades out, if you're an intraday scalping trader, then you go down to the faster time frames. The slower the market, then the faster time frame you're going to have to move to if you feel you have to trade. A lot of traders won't trade in these markets. They will wait and be patient. But patience is a problem for a lot of us. Let's be honest. We like to sit and trade. We're not very good at sitting on our hands. And if that's an issue and you've got to trade, then if you're going to trade in congested markets, then you are going to have to move down to slower time frames. But if you can be patient and wait, and it all comes down to your tactical approach to the market, because a lot of traders will take one tactic to multiple markets. So they will say, well, I'm a breakaway trader. Breakaway trading gets a bad press because most of those traders don't use volume. If you use volume and understand what it's telling you in the breakaway, then you'll avoid the fake outs, because fake outs can't be hidden through the prism of volume. So if you see a congestion phase and you're going to take that tactical approach, a lot of traders do, that's all they do. They just trade breakouts across all markets, wait for that congestion phase, wait for the market to break away through the various regions, price-based support or volume-based support, whatever they may be. If it's confirmed with volume on the breakaway, that's it. That's what they trade. So they'll take that across every single market. So that is one approach. Other traders focus specific. They'll take an array of tactical approaches to a limited number of markets. So they'll take, in the Forex world, for example, reversal trading, they'll apply it to maybe only 3 or 4 particular currency pairs. Or they'll apply trend trading or whatever they want to trade, or breakout trading. They'll take multiple approaches to a limited number of markets. They'll only focus on 3 or 4 pairs. Other traders trade everything and anything in a myriad of different ways. You just have to find what works for you. It's very slow. You can see it's flashing slow up here on the speed. It's flashing slow. It's telling us, everything is just sluggish right now. We've seen some profit taking come in. The euphoria from yesterday is all dying away. It's all been absorbed into the market. And now the market is just settling down and reacting. This is now spiked up a little bit. 67, 65. This is very low. This should be a few thousand at least, not down at these sorts of levels, certainly on a 1-minute time frame anyway. Let's just go back on the NQ on the multiple time charts. There we go. Starting to see some moves develop. Break away from here, from this region. Again, we had some decent levels building. It's another. Now you've got a ton of volume coming in under that last candle. You've got some buying coming in there. You're looking for the market to react. Bit more selling under that one. Got a decent piece of price-based support on here. Pivot to the upside. Couldn't get through 77.70 rather. Rising volume, falling price. And on this side, you've got falling price and falling volume. As I said, we had some buying coming in under here. There's some volatility now coming into the market. I don't know whether there's news. What's the time? Coming up to 4 o'clock, London fix, which is our time. But you've got a volatility spike here. Bang, out of the blue, ton of volume comes in. That was a signal something was happening. There's buying coming in under that candle. And then over the next 2 candles, I said, this is a signal. This is how fast you have to read it. That comes in, bang, giving you a warning, there's buying coming in. So if you're short, just be prepared for something to happen. Volume falls away, price is falling with it, not looking strong to the downside. Now we've got a volatility candle, ton of volume under it. Looks as though we're going to have a rally to the upside. That's the speed you have to work at, because you're only dealing in a tight range. You've got 4 points here to deal with. And by the time you factor in your stop loss into all this, it's hard work. Trend monitors in transition. You can see again we've gone through dark red, maybe coming out the other side. We'll see what happens. Gone into blue. It's telling us there is a change ahead. Got some decent price-based resistance in here. It attempted to get through there but didn't. Just have a look at where are we on 5? There we go. Much lower time frame. I would say this is a laboured move to the downside, because generally when markets move to the downside, they move pretty swiftly, and this is not moving swiftly at all. Now we're seeing that rally develop a little bit, coming up to test this region here. Okay, it seems we've gone through that. Are we going to come back up to the VPOC? Probably. We've got another level here we've got to battle through, and then we've got to get up here, and we've got to get through this. And if we get through all that lot, we've got to come out the other side into relatively clear water. Volume looks okay. And it all came about because of this. As soon as you saw that warning signal, absolutely clear as day. Bit of weakness coming in, no great surprise. We've hit the volatility, we've hit the VPOC. It's no big deal. You know, it's almost expected that it's not going to go through that with ease. See how much volume we have under this candle. Not a huge amount, I have to say. I would expect more. I mean, if you eyeball it, you look at this candle, for example, and this candle had decent volume under it. This had lower volume under that width of spread, if you will. So just purely from a very quick comparative nature. And you could also compare it with how much buying there was in here, up to 1.5 tons and even more to propel this higher in here. So this sort of volume under that sort of spread of candle looks a bit lightweight. So it doesn't look as though it's going to follow through. Those two candles, very weak volume to the upside, pretty weedy. So, you know, the rally looks pretty pathetic on that one. Decent volume under that candle. Look at the candle, that candle and that volume, this candle and that volume, pretty much identical volume. 2/3 the price action, I suppose. Much more realistic. Gone through that potential platform of support, which didn't hold. Now we're off to the downside. Rising volume. Good. Looks nice. No wicks to the body to speak of. Trend monitor's transition through to red. Trend line is diving. This comes with the trend monitor, by the way. This trend line is 2 indicators in one. Just helps to give a perspective on where the trend is in relation to the fault from the midpoint. Indecision. Not really telling me very much other than indecision. Can't really infer that this is a reversal or anything else other than it's a pause point. And another one. Volume's fallen away. Resistance overhead at 57. Testing. Might hold, not that strong. Broken through. Coming back up again. Not terribly strong levels here. Got a cluster of 2. Might come into play, might just hold it, depending on the volume down here. Decent volume under that one. So expect you know, some decent buying in there as well. It's good. Coming back to the upside again. Resistance coming into play. And you're looking at that there, and you know, you're looking at this almost sinusoidal wave of price action, and all really it is just in here. That's really all you're looking at. And it's, you know, it's a tight range. No, the Nasdaq hasn't. The ES, is it the ES that's hit the highs? Yeah. No, not at all. Let's just go and see what's happening on commodities, on oil, which is there we go. Okay. We're up to 22, 57.22, 24 now. A little bit of weakness on that last candle on 15. Good volume under there, and the market was trying to rally and has fallen back, so we know there's selling in there. So it's an early warning of potential weakness. Depends how this candle develops, but certainly, you know, that's not looking particularly strong. Might see a repeat of it on this candle, but certainly with strong volume, weakness ahead, doesn't automatically mean the market is just going to roll over and reverse and become a bearish trend, but it just signals that there is some weakness there. There's a lot of selling in that candle, because if there weren't a lot of selling in that candle, the candle would have closed up here nice and wide with a close near the top. It hasn't. It's closed back near the open. It's all very simple when you think about it. It's on the 30-minute, just taking a different perspective. You can see that's the selling we've got in that 15-minute candle. Double it up and you know, you're over here. Good volume under there, so we know we've got selling in there. No great surprise given the extent of the rally so far. So a lot of it is going to be profit taking. Nevertheless, this is high volume. So there is a little bit of weakness in the market now coming in, but it's to be expected. It's not, you know, it's not a bolt out of the blue. Let's be honest. Gold still trading sideways, still trading within this volatility candle around the volume point of control. So that's really not going anywhere else, certainly from an intraday perspective at the moment, unless the dollar collapses. There we go. And it's literally just clawing its way back up. As you can see, trend monitors now transition. We went through into the red, out to the other side. Doesn't always follow that it has to go into the stages of color. In other words, darker red, darker blue, and then brighter blue. Sometimes it skips if it's a quick transition, which it is in this case. And you can also see the volume point of control. It moves around depending on where the volume is building. It will always track where the heaviest concentration of volume is and where the fulcrum of the market sits at any one time. So it's not a static thing. It moves around the whole time, obviously very quickly on a fast chart like a 15-second chart, but also it will do the same on any other time frame you care to look at. This is developing nicely into a 2-bar reversal, which is a repeat of this. So you've got the hammer, you've got some buying coming in here, you're still trading in volatility, so you're looking for some sort of reversal anyway. And you've got the potential of a 2-bar reversal here. This is 2 candles on 15, which on 30-minute would be exactly that. So again, you know, it's looking as though this market is trying to reverse and claw back some of the losses that have occurred since the open. Can I pass back to you, or you? Yeah. I'm just going to pass back to Anna for a moment, just for a change of voice, because my throat's getting a bit dry, to be honest. So let me pass back to her.
Fantastic. Welcome back. I think both of us are going to have to take a rest later on this afternoon. Well, there we are. Right, a couple of things. What do I want to say very, very quickly? Something very interesting, actually. We talk about the insiders, the market makers, etc., etc. You may know that today is Slack is coming to the market. One of these list of companies that they don't actually have anything. They don't have assets in the way that typical markets, a typical company has, but they have lots of users. They're losing lots of money as well, but they've decided to come to be listed on the market, but they're not going through the usual route. They're going for what's called a direct listing. Apparently, that is a much more high-risk strategy. It could be a complete disaster for them. But what's interesting is they are still appointed a market maker to look after them. We say, well, who, you know, you think in the days of electronic trading, David, you think the role of the market maker has actually, you know, been reduced and what have you. But in fact, it hasn't. And in fact, where's this little bit on here from Time? It's a really interesting article to go and read. There we are. Thursday, one man, Peter, you pronounce his name Giacchi. He's an Italian name. A long-time market maker for Citadel Securities will be tasked with opening the stocks. He was the man behind Uber. and etc., etc. And then Morgan Stanley is the named advisor to the designated market maker, and they're going to try and make constant sense of the supply and demand. Well, they see what the supply and demand is. As I said, it's all explained in the book. I'm not sure this is going to work out for Slack. I think you know they'll be driven back into the warm arms of a market maker who will then, it really manages their, what the market maker does, it manages the book, doesn't it, David? As shares. If you see the book as shares, the buyers and the sellers, that's what market makers do. And of course, they like to make a bit of money on the side for themselves. So I thought that was really, really interesting, and it'll be interesting to see where that one goes in the coming weeks and months. And just generally, at the moment, there's another really, really interesting article, which if you are interested in investing and, you know, trading, making your money for trading, eventually you will take that money and you will have to invest it in the market as well. It's understanding the type of stocks that do well in the different in the business cycle. Now, we all know about the business cycle, meaning we're going into recession, expansion, etc., etc. But we've never had this. We've never had such low interest rates before. Basically, there's so much cheap money going around at the moment, and the effect that that has on the different types of stocks. Do you go for growth stocks, values, or you go for what is called value investing? But this is a really, really interesting article, and it's from this guy, the Informed Broker, Joshua M. Brown. In fact, I'm going to put the link in the question in the chat, because I really would urge you to read and take note of what he says, because it is absolutely fascinating. And on that note about interest rates, there's something else which is quite interesting, is the language of the Fed has changed. There's all sorts of the articles, and you'll be coming across them soon, where not only are we talking about central banks, you know, cutting, and going deeper and deeper into negative territory. There's even speculation that this is the path that perhaps the Fed may go down itself. So a lot going on in background, not just the political stuff. Obviously, we have the trade issues with the US, China, and also now with Europe as well. That's all apparently going to be discussed at the G20 at the end of the month. So we've had the FOMC, now we've got the G20 to look forward to. In the meantime, between then, as a trader, it's a great time to be trading, because there are fantastic opportunities across all the markets. They don't, you know, I wish we could drum a few up for you as during the webinars. What normally happens is, as soon as we shut down, something does happen on the charts, but we just have to be patient. We had some great trades this morning, haven't been rewarded so much with David, and these are the trades I was looking at this morning with the pound yen and cable, and you can see their relative performance on the three time frames of my matrix, which is the 6 minute, the 12 and the 30, but they're kind of in the middle at the moment, so tells me that they're probably in some kind of congestion, and I can tell that because all the lines are going in the same direction. But that doesn't last forever. Eventually there is divergence, and that's what we want to jump on it to you know, to find a trend. It could be a micro trend, it could be rejoining or joining a primary trend, or even taking a counter trend trade, a secondary trend, but there's enough in it to you know, to make it worth our while. And obviously you have to look at the risk factor as well. Right, we're going to stop there. Next week we're back on Wednesday, not Thursday, and then we're back to our usual Thursday slot. Thank you so much for coming along. Thank you so much for putting up with us with our terrible throats and coughing and what have you. You're very patient, and we, and David and I, are always very, very grateful. We will go and lie down and take lots of manuka honey, as has been suggested, and lemon, although probably I think some warm milk with some brandy in it might help as well. I hope you enjoyed it. Enjoy the rest of the trading day, the rest of the trading week, and we'll catch you next time. Take care.